Today is Thursday, December 20th, and we have a new trade alert. The VIX is trading at 2018 highs, and we're collecting $1,684 with this trade alert today. This is a rare money-making opportunity. Now, if you're getting this trade alert late, that's because you're not subscribed to our YouTube channel. Right below this video, you can subscribe and click on the yellow bell, and you'll instantly get our next trade alert right when it first comes out. Also, if you want to get the alerts even quicker, join our newsletter list by clicking on the left-hand link in the bottom corner of this video to start a free 30-day trial to Portfolio Builder. With the VIX trading at $26.46 and actually jumping to $28 just as we were producing this video, we've been presented with a rare opportunity to generate a very high return selling call options against U.S. equities. Here's the VIX. Last year in 2017, we had a higher level of VIX in February, and this amount of volatility typically does not last for very long. Yesterday, Fed Chairman Powell told the press that the economy is stronger than ever and that they will continue raising rates, although at a slower pace than previously expected, essentially telling the markets that they are wrong. And in the past month, the SPY ETF has reacted adversely to the Fed raising interest rates and has crashed from 280 down to 250. This caused our gold and bond positions to spike, which we had a 50% position in our model portfolio. And eventually, our covered calls against these positions were assigned. This means we made the maximum return on the trade with the covered call we wrote, but missed out on some of the upside from the overnight jump in bonds and gold. And if you do join our newsletter, you can click to see our spreadsheet. These are our open option writing positions, and you can see down below we were assigned on the TLT and the GLD, where we collected a premium of $1,078 and $253 in profits from options. And then in terms of the sale of the stock, we broke even on the TLT and generated a $200 profit on GLD. The total portfolio was up $814 at the start of this video and has successfully sidestepped drawdown during a very difficult market prior to today's trade alert. And this launched December 11th, right in the middle of the equities crash, initially starting out with a 40% stock position, 10% cash, 10% gold, and 10% bond defensive positioning in the allocation of assets. After being assigned our bond and gold position today, I'm now reallocating for a short period of time to a 70% equity position and 30% cash position to take advantage of the extreme levels of volatility and fear currently in the equities market as the news screams to sell. And David Tepper urges to move to cash. Powell just told you the Fed put is dead. This is an interesting chart from Twitter, and here's some of the commentary on the image that is very interesting. Social media leaders are saying we are entering a bear. Germany has already crashed. Oil has already crashed. Global markets, emerging markets especially, have already crashed. Small caps have already crashed. Financials have already crashed. China has already crashed. Transports have already crashed. All assets are down. SPY PE ratio is back to 2012 level. Berkshire Hathaway trading at 1.3x. In general, he's asking if perhaps we're getting near the end of the bull market. Historically, bad years tend to be isolated since 1942, excluding the 73-74 and dot-com bust. Here are the returns the year following an S&P after a crash. Profits ranging between 4%, 5%, 7%, 12%, 12%, 16%, 20%, 23%, 24%, 27%, 27%, 31%, 38%, 44%, and 53%. In other words, After this significant of a bear market, typically markets react to the opposite direction. And then he has this comment, you have to have a positive mindset to be a successful investor. What could come out of the left field and possibly go right in 2019? Fed stops raising rates, trade war resolution, China rebounds, Germany rebounds, Brexit resolution, no government shutdown, emerging market rebound, oil rebound, sentiment improvement. An oversold market is indicative of positive future returns. An overbought market is indicative of negative future returns. So let's take a look at our 4 largest positions covering the USA, Japan, China, and Germany, showing just how oversold world equities are currently. The SPY ETF has now given up all of the gains of 2017, crashing from a high of 290 down to 250. EWJ Japan from $64 down to $51, crashing for just under a year. MCHI China from 77 down to 52, just under a year. EWG Germany down from 35 to 25 in just under a year. And so here's today's trade alerts after adjusting my portfolio holdings to 70-30 equities cash. This is the change to the target allocation in the software for Portfolio Builder up top. And this is the trade alert and so as you can see, it's alerting to increase my exposure to the US SPY, the Japan EWJ, and to sell my gold position while we increase in each of our underlying global country index ETFs. So to prepare for the potential upswing in equities, I've covered the outstanding covered calls, which were reaching almost 90 to 95% of their potential profit and expiring tomorrow. And now you can see our open positions are all cleared out, and we've covered all of them down below. To the right, we can see the net credit generated on each of these trades to date. Next, I place the following trade entries into the stock position. But it's important to note that I didn't buy the exact amount the trade signal had up above. I bought enough to get a even 100 multiple of shares. So here's how I ended up. This was my holdings before. And after making these purchases, here are how many shares are owned in each underlying ETF, allowing us to write 4 covered calls against the SPY, 6 against EWJ, 8 against EWG, 5 against EWU, 3 against EWZ, 13 against MCHI, and 4 against INDA. Today, however, I'm only selling a covered call against my SPY position, which offers the best premium reward, while I'm allowing my international ETF positions to remain long. The trade alert collects $421 times 4 contracts for $1,684 against the SPY ETF. Sell to open for December 31st, 2018, 247 call options for a premium of $4.21 per share. If the SPY ETF jumps to above 251.20, I may potentially be assigned on this option contract and have to re-enter the position. However, if the SPY trades below that level until the expiration, I'll get to keep the option premium and my shares of the SPY ETF. Here's a look at our option writing open position tab, which now only has a single position open. Now, please note I do intend to switch back to the default 40-40 bond equity, 10% cash, 10% gold settings as soon as a sharp reversal has occurred in equities. So look for a new update tomorrow morning. And if you want to get our trade alerts instantly when they first come out, click in the left-hand corner. Come sign up for your free 30-day trial to Portfolio Builder's income platform.